Hi everyone, welcome back to my channel. In today's video, I'll be talking about investing. I haven't made a dedicated video on investing on my channel before, but I've mentioned in many videos that I do invest regularly. Since I started working in 2020, I've been investing every single month. I've learned a lot over the past 5 years and I started as a complete beginner. I didn't come from a finance background and I picked up everything from scratch. I know there are so many videos and content out there in the world about investing for beginners, but I'm making this video anyway for anyone out there who perhaps are similar to me. Maybe you're also a beginner to investing and you want to understand it better, but you feel like you just don't relate to a lot of the finance channels out there. There's this thing called the curse of knowledge where you assume people know as much about a certain topic as you do. I'm hoping that this video doesn't have that and that it's really like a layperson speaking to another layperson. I'm not a financial advisor or a professional investor. I'm just someone who cares a lot about personal finance and wants to make wise decisions. That's why in this video, I won't be focusing so much on the how of investing, but rather the why, looking more into mindsets and philosophies. There's a lot of instructional content on the how, so I want to focus on the why so that you know the reason behind any decision or action that you take. Then it becomes easier to pass through all the information when you know what principles to keep in mind. Here's an overview of what I'll cover in today's video. As always, I'll timestamp everything in the description box below. Just a disclaimer before I start, if you're looking for some secret shortcut to getting rich quick or making millions of dollars through investing, then you're not going to find that in this video. I'm also not licensed in any way, so don't take my advice as professional advice. This is just a sharing of my own personal experience. With that, let's get on to the video. Let's start with my investing goals, which are also my reasons for investing. My goals are why I invest. I really only have two main goals here. Firstly, I want to build a solid pot of savings for my retirement. And secondly, I want to prevent those savings from being eroded by inflation over time. To achieve both goals, I choose to invest my money for the long term. Let's dive deeper into each goal. So my first goal, to build a nest egg for a comfortable retirement. A nest egg is just a fancy term for a substantial sum of money or other assets that have been saved or invested for a specific purpose. And my purpose is a comfortable retirement. Personally, I think it would be great if I could retire at 60 years old or even 55. CPF life payouts only start at 65, so for those 10 years in between, I would have to live off my own retirement savings. As grateful as I am for my CPF, I still want to save more on top of that. Having more money gives you more flexibility and options to choose the kind of lifestyle that you can have in your retirement. So I would like to be more prudent and save more so that I have that financial flexibility in my old age. So that's big reason number one. You might be wondering, how is this related to investing? After all, saving for retirement can just be saving money in a bank account or topping up one's CPF. How does investing fit in the picture? Well, that is linked to my big reason number two. My second goal, which is closely linked to the first one, is to prevent my savings from being eroded by inflation. I explained this idea in greater detail in my Personal Finance 101 video, and I'll put that clip here. Well, the number one reason why it's important to invest is because you want to preserve the value of your money. You know how prices have been increasing over the years? Things that used to cost $2 today will cost $10 in the future. That's what we call inflation. Singapore's current annual inflation rate is about 3.1%. The thing is, bank interest rates cannot outpace the inflation rate. So your savings will continue to depreciate in the bank, which means your money will go down in value, even if the absolute value is slowly crawling up. That's why it's recommended that you invest your money to give your money a better shot at outpacing the inflation rate. So in order to achieve my first goal of having a nest egg for retirement, I need to make sure I also meet my second goal. I'm only planning to retire almost 3 decades from now, which is a very long time away. In 3 decades, the inflation rate will definitely eat away at my hard-earned savings. By the way, your CPF money is also being invested by CPF. That's how your special account grows at 4% every year. If you were to top up your CPF, that's technically investing as well, just that CPF is doing it on your behalf. So those are my two objectives with investing. I don't invest in the hopes of getting rich quick. I invest to make sure that my retirement savings can keep up with inflation. So I have quite a modest expectation of my investment returns as well. Having these goals in mind will guide my investing decisions and principles, which we will discuss next. If you haven't already, you can start thinking about your own goals or objectives and see if investing can meet those goals. After all, investing is the means to an end, not the end in itself. If you know your end point, then it's easy to stay on track and not be swayed by false prophets. Now that we know our why, let's talk about some principles to keep in mind in order to stay focused and on track with our goals. As I mentioned, my planned retirement date is not for another 3 decades from now, so my very first investing principle to remember is that I invest for the long term. To put this into context, here's the reality of investing. Your invested money will go up and down with the markets. So if you invest your money, you'll see that amount go up and down all the time. Of course, everyone wants their money to go up and increase in value, but can you handle it when you see it going down? Are you going to panic and sell away all your investments the moment you see it go down? Here's what I think. In the short term, the market will always fluctuate, but in the long term, think like decades from now, it generally trends upwards. Here's a chart of the S&P 500. You can see that there have been really bad economic crashes over the last century, but it's still generally going upwards over the years. How is this relevant to me and my principle of investing long term? Well, during market downturns and when I see that my investments are in the red, I need to remember that I'm in it for the long haul. And in the long term, that red will most likely and hopefully become green again. What I'm not going to do is panic sell my investments at a loss. Of course, there are more complex questions to consider, like what would you do if the market crashes around the time you plan to retire? But that's outside the scope of this video for me to explain. But that's also a really good question to keep in mind as you continue on your investing journey. My second principle is that I invest passively. You'll hear the terms active investor and passive investor a lot. An active investor would be somebody who buys and sells stocks frequently and has an eye on the market all the time. I'm not like that at all. In fact, I'd like to do as little work as possible. So to me, being a passive investor means the following. I don't try to time the market, monitor the market, or pick stocks. So what do I do as a passive investor? I automate my investments every month and I invest in index funds. There's a strategy called dollar cost averaging or DCA, and that's what I do. It means to invest a fixed amount on a regular basis, regardless of the price of the stock or fund. I'll share some links in the description if you want to read up more about this. I'll also explain more about how exactly I do this in the 5th chapter of this video, so keep watching. I find that this strategy is the most sustainable for me. I'm quite a risk-averse person, and beyond the basics of personal finance, I do not enjoy monitoring the market and checking stock prices every day. So if you're like me and have other hobbies and interests, this might be a good method for you to build up your habit of investing regularly. Finally, my final investing principle is that I only invest in what I understand. This means that I don't invest in any speculative or alternative investments. I don't invest in crypto, options, futures, foreign currency, or any of those things that you might have gotten ads for when they try to sell you courses online. These types of investments tend to be extremely risky and are also tied up with all these subtle and unsubtle messaging of making huge profits and growing money quickly. That is not my objective with investing at all. So personally, I can easily move past the lure of all these alternative investments and focus on what seems most reliable and sustainable to me, which are things like funds, bonds, and maybe some stocks. If you're at the beginning of your investing journey, you might feel like you don't understand anything. That's fine. I also didn't know anything when I started. But the only way to get past this phase is to start reading and doing your research, and eventually the puzzle pieces will come together. I have a few resources that I'll share towards the end of this video, which you can use as a starting point. So in summary, these are my 3 principles of investing. I invest for the long term, I invest passively, and I only invest in what I understand. These principles will guide me through the decisions that I will choose to make in order to meet my goals. In this next section of the video, I want to briefly cover the last 5 years of my investing journey, just as a retrospective of my journey so far. Even though I just talked about my principles of investing, I didn't always follow them from the beginning of my journey because I didn't know them. So I may have made decisions that I wouldn't make now, but it's all part of the journey, and so far I think none of them have been cataclysmic to my finances. My journey started in 2020, which is also the year I started working. At this stage, my salary was $3,000 and I was also saving up aggressively for my house. This was when my friend introduced me to the concept of investing, and we both started putting $100 a month into DBS Invest Saver. At the time, I was investing in the Nikko AM Singapore STI ETF. Around 2021, when I finally got my house settled, I started trying out robo-advisors like Stashaway and Syfe. I got a pay raise, so my salary was $3,200. I had more spare cash in general, so I started to put in about $200 into those robo-advisors, into their most basic and standard managed portfolio. I was also still contributing to my DBS Invest Saver at $100 a month, so that's about $300 a month in total that I was investing. In 2022, I bought an insurance savings plan in April, and I pay about $200 per month for that. Alongside that, I was putting aside between $300 to $400 into my various robo-advisor portfolios. In total, I was investing about $500 a month. 2023 was when I started trying to be quite ambitious. My salary had increased to $4,000. So on top of everything I was doing, I also started putting money in SRS. SRS stands for Supplementary Retirement Scheme, and it's an account that's similar to CPF but voluntary. I'll explain more in the 5th chapter of this video, but basically I was interested in the tax relief benefits from topping up my SRS. So with the money that I was putting inside my SRS, I was investing it through Stashaway. At the same time, I also started exploring individual stocks on Syfe. As I said, this was a time of experimentation for me, so I do hold some individual company stocks like Google and Apple, but they form only a very small percentage of my overall portfolio. In total, I was investing about $1,000 a month. So now we're caught up in the present and it's 2024. One of my goals this year was to educate myself more intentionally about investing and the various strategies around it. And so while I was busy researching that, I still wanted to be investing regularly, hence I was looking for the most passive strategy possible. I think I was also quite tired from all the experimenting I was doing in 2023, and so I decided that I really preferred this kind of passive investing strategy. Every month I was investing about $1,000, which is the same as in 2023. As you can see, over the last 5 years, I really wasn't very adventurous with my investments. One thing that I did most consistently was dollar cost averaging into various robo-advisors and index funds, which basically means I invest small amounts regularly rather than make lump sum investments with larger amounts. Next, let's take a look at what's actually in my investment portfolio, shall we? While I was preparing for this video, I finally took the time to consolidate my investments into a table. If you're interested in using my table tool, I'll add it to my budget sheet template. Just in case you're new here, I have a free budget and net worth tracker template on Google Sheets, which you can find through this PayHip link. Apparently it's quite popular because it's gotten over 14,000 downloads since I first posted it. It's also free to download, but you can also donate a little bit to support me if you want to. Anyway, here's an overview of all my investments. Most importantly, and I should say this first, this is not a template of what I think a model investment portfolio should be. Honestly, it's just a mishmash of all the investing decisions I've made over the last 5 years, and this is the result of that. So I hope you don't copy this under the impression that this is the right thing to do. Also, if you're an investing pro, please let me know if you have any suggestions on how I can improve my table or my categorization or just my strategy in general. Alright, let's take a closer look at what I have invested in. I think it might be most useful to look at what types of investments I have. So right now I have it sorted by percentage, so I'll sort this now by type. I won't read them out line by line, but you can pause the screen to see what funds I'm investing in and on which platform. But primarily, as you can see, I'm investing in index funds, managed portfolios, and mutual funds. They're not all exactly the same, but they're similar in that they are a collection of funds and stocks rather than an individual company stock. I think that my insurance savings plan is also mostly invested in mutual funds. So this is the bulk of my investments, which make up almost 70% of my total portfolio. CPF is my largest investment, which is at 27%, but I don't really have much say over what that's invested in. It looks like I have a few individual stocks, but they only make up 3% of my overall portfolio. This was from 2023 when I was trying my hand at buying individual stocks, and even then I bought only the really big companies. Then I realized that I'm probably already investing in these companies through my other funds, so it felt pointless to duplicate that on my end, but I'm just going to hold on to these stocks for now. I also have these 3 charts right here that aggregate the data I have in these tables. So at a glance, I can see my allocation of assets, location of my assets, and also my risk allocation. Right now, about 60% of my assets are in high risk and moderate risk funds, which I think is still quite conservative for someone my age. Honestly, it does feel quite overwhelming to see my money spread across so many different places, and I wish it was more consolidated in one place, but at least I'm keeping track of them here so that I don't forget where I've kept my money. So yeah, that's how I've invested my money over the last 5 years. If you need a similar system to track where all your investments are, you can find this template in the link that I'll put in the description box below. Alright, next. In this section, I'll talk about the more technical details of how I invest. This might seem a bit simple, but it's the main way I've done it the past 5 years. So if you're not new to this, then please bear with me. But if you're a newbie, I hope this clarifies the process. So firstly, you need spare cash that you want to invest. Ideally, this is not cash that you will need anytime soon and that you are willing to say goodbye to at least until retirement. When I first started investing, I was only investing $100 a month. Now I try to invest at least 25% of my monthly salary. I want to briefly mention this term called leverage. You might come across it in the investing world. This usually means borrowing money or taking a loan to make an investment, basically using debt to make an investment. This is generally not a good idea for most people and is extremely risky. The only 2 situations I can think of where leverage might be a good idea is when you are starting a business where you need a lot of capital at the start, or when you're buying property and you need a mortgage from the bank. But in most other situations, avoid leverage at all costs. You can also invest your cash through SRS. So instead of investing directly with your cash, you can put your money into your SRS account, then invest your SRS money through an investment platform that can invest it for you. You can open an SRS account through DBS, OCBC, or UOB. I'll link some useful articles below if you're interested to read more about it. The main advantage of using your SRS is that you can get tax relief from the amount that you put in your SRS account, up to $15,300. The main disadvantage of this is that the money won't be as liquid as your cash money, and there are penalties if you withdraw your SRS money early. But if one of your investing principles is to invest for the long term, like me, then this shouldn't bother you too much. Another thing is that it's also a bit trickier to invest SRS funds as compared to cash. A lot of the online investment brokerages typically can only accept cash. However, now with different types of platforms, it's become easier to invest with your SRS funds. So let's look at that next. Next, you want to decide which platform you want to use. There are a whole bunch in the market that you can try. These are some of the ones I've seen to be more popular in Singapore. If you saw my table in the previous section, you've seen that I've tried quite a few already. There are some here that I would consider to be more robo-advisors, and some are plain investment brokerage accounts. For the brokers, you are playing a more active role in buying and selling your own funds and managing your overall portfolio. Personally, I prefer robo-advisors because I find them to be the most convenient. The fees are slightly higher than if you were to DIY your own portfolio, but it's the price you pay for their services. The main reason I prefer robo-advisors is because they can rebalance your portfolios automatically for you. Rebalancing is important because it mitigates volatility and manages the potential risk in your portfolio. I know it sounds cheap, but just remember that it's important. Robo-advisors do that work for you, so you're not having to rebalance your portfolio yourself. This section of the video is sponsored by Stashaway, so I'll be using their platform as an example. I've said this many times before on my channel, but I've been using Stashaway since the very beginning of my investing journey. At first, I was only using their simple portfolios, which are their cash management accounts, but my very first investment portfolio that I set up was on Stashaway, and that was long before I started my channel. They were also one of the first few robo-advisors that supported SRS investing, so you can do that on their platform as well. I really have to thank Stashaway for helping me on this whole investing journey. If I hadn't come across their platform 5 years ago, it would have taken me that much longer to figure it out. Their platform makes it so easy to start investing that even a beginner like me back then felt like I could do it too. I'll show you a screen recording on my phone of how the app looks like. This is the home page. Let's go into the transfer tab here. Here's where you can deposit your cash into Stashaway to be invested. As you can see, they support both cash and SRS. The cool thing with Stashaway is that all their portfolios are eligible for SRS investing. There are low-risk options like the simple portfolios and income investing, and then for medium to higher risk, there's also the general investing managed portfolios and the flexible portfolios. Under the Invest tab, here's where you can find your various portfolio options. When I first started, I picked the general investing portfolio and then I can select my risk level. Let me show you my SRS portfolio. If you click into it, you can also see exactly what funds you're invested in. In this portfolio, my SRS money is mostly invested in equities, and I can see exactly the breakdown of funds it's invested in. If you're interested, I have an affiliate link with them here and you can sign up to try it out. It will also be linked in the description below. This is only a very brief overview of how you can start investing, but I hope that this will inspire you to do more research into this topic. It took me 5 years to get here, so don't expect your first few months of investing to look like mine. Or maybe you're only a few months in, but your knowledge is already way beyond mine. That's great too. I'm very happy for you. We're almost at the end of the video. I hope everything that I've covered so far has made the topic of investing less intimidating for you. If it's only raised more questions, then that's also a good thing because now you can start finding the answers to those questions. At the start, I did a lot of Googling, reading blogs, and watching YouTube videos, and slowly, piece by piece, it did help me understand the world of investing. But if I could go back and save myself some time, I would just recommend these books to my past self. And so the 2 books that I will recommend to you now are these: Girls That Invest by Simran Kaur and Quit Like a Millionaire by Kristy Chen. I've mentioned these books before on my channel and I will continue to recommend them until I find something better. Honestly, I think that if you want a comprehensive crash course, reading a book is the best and most efficient way to go. Then once you have the foundation, you can start building on top of that through your own research. You can find these easily in the National Library or Kino. If you've read them already, let me know what you think in the comments below. Congratulations on reaching the end of this video. I hope this was helpful in some way and that it can inspire you to start on your own investing journey if you haven't already. I am far from an expert and I'm only sharing what I've learned, but if you are an expert and you'd like to share your thoughts on how I can improve or any nuance that might be helpful, feel free to say it nicely in the comments below, then we can all learn from each other too. If you're interested in more personal finance type videos from me, I have many more on my channel that you can check out. I recently posted one specifically about insurance, or if you want an overview of how to organize your personal finance in general, you can also check out this video. Thank you for watching and I'll see you in my next one.